So when we're writing a mortgage loan for you, the most important thing that we need to look at is not only how to get you the best interest rate, but it's also about building the smartest and best financial loan strategy for you. So we're pulling everything in that you sent us, working with the underwriters, and then we want to look at your goals and how long you might be in the mortgage for. We're going to pull all of this together, and that's how we're going to build the best loan strategy. But today, what I want to show you is what I think should be the most transparent part of this process that you're not going to see from most mortgage lenders or banks. And that's really how it works in the interest rate market. Most people don't understand that interest rates actually move every single day. It's kind of like the stock market. If you were buying, looking at maybe Google stock or something, what the stock price is of that stock that day is going to be different the very next day. It's the exact same thing with mortgage rates. So we can't actually lock in your rate until a seller has taken and accepted your offer and you have an executed offer. That's why I want to show you this. So this is the mortgage bond market, and like I said, it's like the stock market. Every single day it's a little bit different. Here was today, yesterday, the day before. There were even some changes, big changes, a long candlestick, that's what these are called. One day might have been a big change, and then another day might have been a very small change. Once you have an executed contract, at that point in time, that's where I'm going to go shop the rates for you. We have access to over 30 banks that we're going to shop. And once you're under contract, I'm going to go through that process, shop all of the banks. And then the best part is what I'm going to show you is completely behind the curtains, everything available to you. And it looks like this. So I'm going to pull together all rates available once I have we call this a rate stack. And so that's going to be this column right here. This column, this is really kind of the fine print, what most banks don't really show you. You could get a 4.75, but in this case, this would cost about 5.99 points. So it's a cost of, in this scenario, $16,000. Now this is an example rate board, but that's for this rate. Then you could go up, let's say, to 5.625. That now costs 1.59, or maybe about $4,300. You can keep going down, up in rate, down in cost, even to the point where maybe we're giving you money back at closing for a little bit higher interest rate. But now the strategy is to put all of this together in something understandable. And I'm going to show you, based on the timing we think you'll be in the home and the mortgage, I'm going to pull together what I feel like is the best strategy, but I'm going to show you behind the curtains, and you can pick whatever of the rates that you want. So now that you're empowered with all of this information, this is why clients refer us, because you get the best interest rate that you get to choose, but along with the best loan strategy.